Hello, everyone. Thank you so much for joining us today. I'm Marche, the webinar director at Advice Chaser. Before we introduce our guest and get started, we do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles are expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. We are thrilled to bring you today's educational presentation, and attendees are muted, but we encourage you to ask questions using the chat box. The presenter has said that he'd be happy to answer those queries during the webinar today or during our question and answer period at the end of the presentation. If you ask a question in the chat box and we're not able to get to it, go ahead and leave your phone number and email address as well. And if we're not able to get to that question, we can go ahead and contact you after the event. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. Well, I'd love to introduce you to our guests today. Sorry, a little frog in my throat there today. Mark Seither is a partner and wealth manager with Kingsview Partners in Knoxville, Tennessee. He has a Bachelor of Arts in Economics from San Diego State and began working as a financial advisor for Northwestern Mutual in La Jolla. Mark enjoyed finding innovative solutions to clients' complex problems, and his desire to work with the entrepreneurial minded helped him thrive as a financial advisor. Mark honed his skills as an advisor and a planner, and he looked for a platform that would better pair with his desire to work with clients needing advanced planning and specialized fixes. He found his spot back in Northern California in early 2017 when he joined Trust CFO and assisted in integrating complex tax and estate planning with wealth and investment management. Since then, he has collaborated with Josh Saunders, who is a retired Navy and current Southwest pilot, to build Kingsview Partners. Together, they assist individuals on wealth management and tax strategy, specializing in the specific needs of pilots. So Mark, go ahead and come off of mute and say hello to our audience today.
Hey everyone, excited for today's topic. Back when I was with Trust CFO, I think that's when the topic of disability really expanded, because I was an asset protection firm with some very unique clientele. And then as Josh and I, Josh being a pilot and working with more pilots, we did find that there was some unique nuances there as well. So in the spirit of having all these webinars for pilot-centered planning, very excited to bring this topic into light and have someone far more knowledgeable than I am on disability speak.
Thank you, Mark. I'd love to introduce you to our presenter today. Todd Schild is the Regional Vice President of Peterson International Underwriters. He has been in the insurance industry since 2006. Peterson International Underwriters markets its products through licensed insurance professionals, helping them realize the crucial fact that to have one's income underinsured is as dangerous as not being insured at all. Eventual financial ruin is the ultimate outcome. Through education, training, and marketing support, Peterson International Underwriters reaches out to all insurance advisors, providing them with proper tools to help their clients protect their hard-earned paychecks. Todd, I am excited to hear what you have to say today to our pilots, and I'm going to go ahead and turn over the time to you.
Thank you so much, and I appreciate the opportunity to present today. And thank you for those that are taking time to be on this webinar as well. So what I want to talk about today is income protection. Now, a lot of people don't understand income protection. It's novel to them. It's commonly referred to in the insurance world as disability insurance, but I don't like to refer to it as disability insurance. It's really income protection or paycheck protection. Unfortunately, when people hear disability insurance or the word disability in general, the first thing they think about is wheelchairs. And that's actually the thing that's farthest from the truth when it comes to when a person becomes disabled or technically unable to work. So I always refer to it as income protection or paycheck protection. But my question to you is, why is income protection important? What does your income mean to you? Think about that question. This is what a lot of producers ask when they're in front of their clients, and then it's just straight silence. Hey, what does your income protection mean to you? Or what does your income mean to you? Excuse me. Well, it means everything. Okay. We are all accustomed to living a certain lifestyle. Agreed? And because of that, it's all dependent upon what income we're bringing in, whether it's my income, whether it's my spouse's income, whether it's a combination of those two. Our income means everything to us, and that creates that lifestyle. And the question becomes, well, if that income were to go away because you're too sick or hurt to go to work, what happens to that lifestyle? Would there be a dramatic change? The answer is always going to be yes, no matter what type of income is coming in. We hear a lot of times, and we spoke about this behind the scenes, but we hear a lot of times, well, I could live on my spouse's income. Okay, you could? Okay, well, good. I have a question for you then. Is all of your current income going straight to the bank and you're not touching any of that? The answer is usually no, right? Well, guess what? You are relying upon that income. And again, it's going to take lifestyle changes if that's going to happen. Well, when we have proper income protection or have a disability plan that's put in place, we know that we're not going to have to make those lifestyle changes because the paychecks are going to show up, whether it's coming from your employer or whether you're self-employed or from the insurance carrier because you have qualified for benefits. Did you know that over half of US citizens are living paycheck to paycheck currently? Okay, so think about this. If somebody has to wait 90 days or 6 months for even for a disability policy to kick in, that can really create a problem. And they just don't have those funds, behind them. Another thing to think about, and this is kind of a thing that I like to talk about when I'm visiting with brokers and their clients as well, is a lot of times I hear, well, we've got a great deal of savings. Okay, well, let me ask this question. If you save 10% of every paycheck over the last 10 years, okay, 10% savings is actually really good considering where the people in the United States currently are. But if you've saved 10% of every paycheck over the last 10 years, do you know that would be wiped out in 1 year of a disability? Think about that, okay? Is that really what you intended that money for? And to tell you that we can insure your paycheck for pennies on the dollar, and those benefits come to you tax-free, why wouldn't you want to do that? Save your savings for what it was meant for that rainy day, for the storm that comes through and you get a hole in your roof, or the dishwasher goes up, whatever it might be, right? That emergency car repair. That's what the savings is meant for. It's not meant to fund your lifestyle. And another thing that I tend to bring up too is, especially during training sessions, show of hands, how many people in here are insuring their cell phones? And usually it looks like this. People put their head down and their hand goes up. Well, it comes back to, you're insuring your cell phone. Okay, we're insuring an item that used to be $200 or even used to be free with your plan, but now is really $1,000. Okay, yeah, they're expensive, but it's only $1,000. We're insuring a cell phone, but we're not insuring the thing that makes that possible, which is our paycheck. Like, it just doesn't make any sense. So, again, moving forward is, we need to talk about insuring our paycheck to make sure that if something were to happen and we are too sick or hurt to go to work, that paycheck continually shows up each and every time. So I have money coming in, because it's not just about me, it's about my family and my loved ones too. So let's talk a little bit about the important parts of a disability policy. There are some moving parts when these policies are put together. In the insurance world, it's referred to elimination period, but really for the end user, that's your waiting period. So if I hit a period where all of a sudden I am unable to work because I am too sick or hurt, that started what we will refer to as the elimination period. Sometimes it depends upon your policy. Short-term policies have like a 7-day wait. They can go all the way up to a 2-year wait, and sometimes even longer if you want. But whatever your elimination period happens to be, you are not going to get paid until you've satisfied that elimination period. A lot of policies have either a 90-day wait or a 180-day wait for cost effectiveness. And we'll talk about the cost as we move forward in this presentation. But so if I have a 90-day elimination period, I become disabled on day 1. I have to wait until day 90. And then that's when I start accruing my benefits. And then I actually get my first paycheck from the insurance carrier for claim on day 120. So it pays retroactively. The benefit period, that's how long you're going to be paid. This can vary as well. Some short-term policies, like you would see typically through an employer, might pay for 60 days, maybe 180 days, and it's going to pay you once a month. For long-term disability policies, they can range anywhere from 1 year clear out to age 70. So you could get a paycheck if you remain on claim every month all the way through age 70. But a lot of common ones happen to be 1 year, 2 year, 5 years, 10 years. And then usually it's age 65 or age 70 based upon the carrier that you're looking through. Then we talk about the benefit amount. That's pretty self-explanatory. That's the amount of money that you have qualified for that you would be paid if you become disabled and are too sick or hurt to go to work. Now, how is the benefit amount determined? Very simple. If you are a W-2 employee, we are looking at 60 to 65% of your gross income. Okay, you can get up to that amount. You don't have to take the maximum amount. You can have any amount up to 60 to 65% based upon the carrier. If you are self-employed or a 1099 type of employee, what we actually look at from a carrier standpoint would be your net income. So after expenses, before taxes, that's the number we're looking at. Now, that number comes down because we know that self-employed people try to write off everything they can possibly write off, including the air that they breathe. However, there are other business policies that are out there, which we're not going to touch on today, that can help make up for that difference because your net income typically tends to be lower. Typically, when we're talking about pilots, however, most of these pilots that I've run into are W-2 employees. So it comes back to, again, 60 to 65% of your gross income would be what we would be looking at. The other moving part that really comes up in disability policies would be potential policy exclusions. Now, these would be any types of health issues that you've had in the past that that have occurred prior to you applying for the coverage. So let's say, as an example, that you had shoulder surgery a year ago. Okay, the carrier, based upon that information, could say, we will be happy to offer you the policy, but we are not going to cover your shoulder because you just had recent surgery on that shoulder. That would be a policy exclusion. Now, that can also occur for things like diabetes, for cancer, for heart attacks, strokes, you know, all of these other major things that are out there too. And if there are enough of them, or they are severe enough, they may actually say, you know, sorry, we can't offer you coverage at all. But a lot of policies do have exclusions. I will typically say that if you are seeing a chiropractor, you're almost guaranteed some sort of back exclusion or modification to the plan simply for having that done. A lot of people think that accidents would be the major cause of a disability. It's actually sickness. 90% of disabilities are actually sickness related. And the number one cause is actually musculoskeletal, backs being that particular issue. So how does somebody qualify for a typical disability benefit? Well, you become sick or hurt and you're unable to work. Now, what's going to end up occurring through a typical disability policy is they send you the claims paperwork, you fill out part of it, and then your physician fills out part of it. And your physician is verifying that, hey, Todd is too sick or hurt because of this going on with him currently. to do his job, and I don't think he's going to return back to work for at least 1 full year. Okay, well, my doctor verified that I'm unable to work. As we talked about, that starts my elimination period. My doctor just told me I can't work. I haven't been at work since this date because of what's going on. So now my elimination period starts. I wait for that elimination period. Once that's been satisfied, now I go on claim and I start receiving claim payments. Now you'll see on the last bullet point there on your screen that there will be follow-up to remain on claim. You don't just get to start a claim and think that the insurance carrier is just going to go, oh, you've got a policy that pays out to age 70. We're just going to keep paying you until you turn 70. No, they're going to be following up, because guess what? They don't really want you on claim. They want you to start paying your premiums again. They don't want to be paying out the money. They want to be taking in the money, right? It's kind of like casinos. If casinos didn't win, would there be casinos? Absolutely not. If insurance carriers didn't make money, do you think that there would be insurance carriers? Absolutely not. So they're going to follow up and have you fill out forms and possibly interview you throughout the claim process on a periodic basis to make sure that you aren't currently working, that what you're saying is still going on, or if anything has changed. They're very good about it. They're not mean about this sort of stuff, but the reality is that if they get you off claim, they want to do that. So they're going to follow up and make sure that you still have those particular issues going on. And if you do, then the claim continues to be paid out. So in a nutshell, that's really how a typical disability claim process works. Then it comes to the question, well, can everybody that applies for disability coverage qualify for disability coverage? The answer is absolutely not. No, not everybody is going to be entitled to have a policy. Now, there are several reasons that can happen, but here are the primary ones that you see on your screen. The number one reason that people don't qualify for coverage is because of their health. Okay, it can be because of height, weight. It can be because they've had a heart attack or a stroke, or they've had recent cancer history. There are many things from a health perspective that traditional disability carriers just go, I apologize, I'm sorry, we can't help you, and we're not able to offer you coverage. Another big one happens to be because of age. Most traditional carrier policies can be offered up to about age 60. Some of them, I think, go to age 62. So if you are trying to apply for coverage after that age, they're going to say, sorry, you don't qualify for our coverage, and there's no policy for you. Another big one happens to be occupation. Based upon what you do for a living, that can determine whether or not you qualify for coverage. Traditional carriers usually don't like crazy hazardous occupations. They want to see steady income. They don't like people like actors or athletes, not because it's dangerous, but it's because of their contract situation. They don't get a paycheck every 2 weeks or every month. I tell people a lot of times, if you go too high or you go too low, they don't want you either. And that's exactly why we're talking about pilot insurance today. And then we can get into the avocation world. We know that there are people out there that have crazy hobbies. They like to skydive. They like to scuba dive. They like to climb rocks and race motorcycles. All of these different things. And if you're doing one of those wild occupation or avocations, hobbies, if you will, they're going to make you fill out a questionnaire. And the carrier can do one of two things. They can say, we're going to cover you except for while you're doing that particular hobby. Or if you do it enough, they can say, we don't want you at all. So again, you're not necessarily entitled to the coverage. Now, as we're talking through this today, what I really have touched on so far has been from a traditional carrier standpoint. This is what a normal traditional carrier would do for you. Well, guess what? Pilots fall under the excluded occupations for literally all traditional carrier plans. You can call any carrier today, you can call any agent out there today and say, hey, I'm a pilot that flies for a living. That's how I earn my income. Can you get me a disability policy? And they're going to call their traditional carriers and go, no. I'm sorry, sir, we can't help you. We can't help you. Well, guess what? There is an outlet for this. And it happens to fall within the Lloyd's marketplace. So Lloyds of London is where we go because this is an occupational decline, and Lloyds of London is a surplus lines carrier. So they can do all of the things that traditional carriers simply can't or won't do. Pilots would be one of them. So let's talk a little bit more specifically about pilots, their income protection needs, and how a pilot can go about ensuring their income as well.
Mark, I believe you had a question, correct?
Yes, yes. I wanted to touch on something real quick, and this is probably a good time to do it because we're transitioning from the traditional carrier to the pilot specific carrier, which
Yeah.
is, we did see, most people originally view the disability policies as, hey, a physician is telling me I'm not okay to work. And with the pilots that we've dealt with, it's actually the other way around. There are instances where the physician is like, well, you're still fine, right? But
Right.
because these things happened, it's actually just regulation that says you can't fly for 6 months or a year, right? And pilots are taking medicals very frequently. If they become knocked unconscious or something like that, we actually did see, all of a sudden a mindset shift of like, okay, well, what if I'm not disabled, but I'm fine? It's just, there's a piece of legislation somewhere that says I can't fly. And that's really, where we'll dive into here next,
Yeah,
is, hey, how do we cover you specifically as someone who flies?
exactly. And we've solved for that exact problem. And so that's what we want to share with you today, is to show you that the program that's been built specifically for pilots, that it's built for you for a particular reason, because the rules that apply to me as a non-pilot, I'm a desk worker, right? I don't get me wrong, I'm in an airplane a lot because I travel across the country, but I'm not the one flying it. I'm sitting in the back with my headphones on. But it's much different for those that are actually flying for wage, and what they are allowed and not allowed to do based upon things that have maybe happened to them. And from my standpoint, while I know that they're extremely picky about what they're looking for, and it's really annoying to a pilot to say, I could still fly because of that, and I don't know why I need to sit out for that long because of this particular condition. From a passenger standpoint, I don't know if I want that particular person flying my plane if that's happened before, because maybe it could happen again. I understand why they're very picky and very stringent about those things. So this program that we're going to talk about here in a second is built specifically for pilots, and I think you're going to understand why. Now, how do pilots cover this disability risk within their profession? Really, one of two ways currently. If you are a smaller independent pilot, you're going to self-insure, or you can purchase a specialized policy through Lloyds of London. The larger carriers, what I would say the commercial airlines, if you will, typically, not all the time, but typically have a self-insured plan. Now, we can do a little top-off program for them. It's no big deal, but their pilot union typically self-insures and has a program built specifically for those particular pilots. Where we're finding the vast majority of people who are coming to us for this type of coverage would be the small professional pilots. I tell people all the time, if you're flying the Boeing or the Airbus, you're probably not the exact person that we're looking for. Like I said, we can do a little small top-off program above what your union may be providing you. We're looking for the people who are flying the nice, the smaller jets that are 6 to 12 passengers. That's a really nice fit for us, because they typically don't have any income protection available to them through their employer. So again, they either don't have anything, or you come to the Lloyd's market in order to get that policy. If we can jump ahead one slide here, this is how
We
loss
did
of
have
license
one
actually.
question that
Yeah.
that came in really quick.
Yeah,
Yeah,
someone was asking, are there other carriers outside of Lloyds of London that cover this sort of insurance?
No. It can happen through a group plan, but that's few and far between. But for an individual pilot or a small group of pilots, Lloyd's is the only. There is not a traditional carrier out there that will take a one-on-one risk for a pilot that flies for wage.
Okay.
Yeah. So this is how a loss of license plan differs from a typical disability policy. As Mark had stated, and I also had stated earlier, in a typical disability policy, your doctor tells you you're disabled. They tell you, hey, I don't believe Todd's going to be able to work for the next 12 to 18 months. Boom. Starts my elimination period. Here we go. Well, loss of license, it really should be called loss of medical, because you've lost your medical certificate. That's what deems the pilot to be disabled. not their doctor telling them they're disabled. So as your little story earlier, Mark, it's not the doctor. We've solved for that problem. It's the FAA removing their medical certificate that starts their elimination period, not the doctor telling them they're becoming disabled. We know that pilots can be disabled and not able to fly for many more reasons than you or I can sitting behind our desks. As an example, it could be because of a bad blood test. It could be because of a vision test. Any loss of consciousness, my understanding is it's a full year with no flying, no questions asked. Well, if I slip and fall down my stairs and knock my head and lose consciousness, I may be out for a couple of weeks. Hey, and I'm not going to feel great. Hey, fine. But I can return to work really whenever I want to. Well, guess what? If you're a pilot, that's not happening. Absolutely not happening. And there are many, many more things that the pilot could be disabled for than we can even think about a typical person that has a traditional carrier disability plan. But the biggest thing to remember is the definition of disability. What constitutes you becoming disabled? For pilots, it's not your doctor telling you you're disabled. It's when the FAA removes their medical certificate. That's the biggest difference. And that's what makes the loss of license really tailored specifically to a pilot. So that being said, a lot of people say, well, great, that's just got to be ridiculously expensive then. You've created a policy specifically for pilots that has a better definition of disability built specifically for us that are in the air. This thing's just got to be ridiculously expensive, right? Well, the answer is no. It's relative. And there are some moving parts and there are things that make a policy more expensive. And we'll talk about those in a second. But here's what I want you to think about. We have tried to follow what traditional thought processes are for what the cost happens to be. In a traditional carrier sense, they say that a disability insurance policy or income protection plan should cost you between 1 to 3% of your annual income. But that's not really bad, right? Would you spend 3% to insure the other 97%? Absolutely, it makes sense. One of the old tales happens to be, would you choose job A or job B? Job A is going to pay you $100,000. And if you become sick or hurt, you get nothing. Or you can take job B. Job B pays you $97,000. And if you become sick or hurt, you get $60,000 tax-free. Do you like job A or do you like job B? Well, everybody goes, well, that's stupid. I'd choose job B every time. It's the exact same job. It's just that we've got a disability policy built into it. Okay, we've taken $3,000 away, or 3% of the 100,000. Okay, 3% of that 100,000 goes away, and you're insuring 60% of your income. That's all it comes down to. Now, for a pilot, again, it's special risk. All right. What we try to say is we want to be in the 2 to 4% range of a client's income. So traditional carrier policy, 1 to 3%. Pilots, we try to be in the 2 to 4% range. Now, again, these costs can vary because of age. So any disability policy, and these are variables, these aren't just for pilots. These variables are for every disability policy in the marketplace today. The higher your age, the higher the rate becomes, right? No different than life insurance. Okay, occupation. The riskier the occupation, the higher the premium becomes. At the end of the day, think about this from a traditional carrier standpoint. Should a roofer and an attorney pay the same premium? Absolutely not. Okay, roofers have much more dangerous job duties than what a typical attorney does. So the roofer is going to pay more than the attorney does. That's just the way it pays out, right? The chances of the roofer becoming sick or hurt are much greater than the attorney becoming sick or hurt. The benefit amount. Obviously, the more benefit you apply for and you are potentially able to receive, the higher your premium gets. From an elimination period standpoint, the shorter the elimination period, the higher your premium gets. So think about, I talked about a 90-day elimination period. That keeps us really within that 1 to 3 or 2 to 4% range. That's going to have one premium, but if we knock that down to a 30-day elimination period, because the insurance carrier is going to pay out faster, your premium goes up. And then the benefit period. The longer the carrier would pay out, the higher your premium goes. So it would make sense, right? If I have a policy that pays to age 70 or a 2-year benefit period, the age 70 benefit period is going to cost more because the carrier could potentially pay those benefits for a longer period of time. So that's how these policies are built. And again, there's moving parts in there, but your insurance professional can help you out and give you multiple options and show you, hey, here's what a 2-year benefit period versus a 5-year benefit period would look like. Or here's what a 90-day elimination period versus a 180-day elimination period would look like for you. And you can see the cost difference there. So that's really how costs are determined. The big factors are age and occupation. And then we can, those are really set costs. And then we can play around with the benefit period, benefit amounts, and the elimination period as well. So then I like my plan that's been put together for me. What does this application process really entail? What does it really look like? Well, here's the beauty for pilots. As Mark had stated, knowing that pilots are doing their flight meds every 6 to 12 months in most of the time, we don't require them to take a paramedical, which would include somebody coming to your house or place of employment, and they do height, weight, and blood pressure checks. And then you also give them a blood and a urine sample. That's what would happen to me if I were to apply for a disability policy. Okay, but because you as a pilot are doing your flight meds on a regular basis, it's only an application. And the application for us is literally like 3 pages long. It's very, very simple, very, very painless. So only an application, and you tell us what's going on from a health perspective for you. You give us your income and some other information on there, and we're literally off and running. Our underwriters get a hold of it and then put the offer together to get back to your agent to provide you with that coverage offer. So it's really an easy process, and it becomes easier because you don't have to go through the hassle of having that paramedical done.
All right, we have some time to open it up to questions now.
Yeah.
So Mark,
Yes,
I believe we have a couple to start with, and
yes,
go ahead.
I was gonna say we did have a few come in. One of those was so if someone, this person was asking if someone is a commercial pilot and takes out a disability policy, but then transitions to an instructor role, do they still get to keep their disability policy when they're no longer actively flying? Because they could potentially go back.
Yes, they can. So your policies are fully, in the insurance world, we call it fully portable, which means if you leave your employer, you can take it with you if you choose to do so. So yes, those benefits could still pay out. And especially if you're an instructor, I mean, at the end of the day, I haven't heard of too many flight instructors that are busy because they don't have their license, to fly. So, that's going to be a necessary piece of equipment for you to be able to still perform your job, is to have a true medical certificate readily available. So yes, absolutely. Policies are fully portable and they can take them with them.
Yeah. And then another one that came in was, can a loss of license policy, or can you get the loss of license policy in addition to your airline's current disability coverage?
Yeah. So yes, you can. We, as I kind of mentioned, we kind of do a little bit of a top-off program for them. So what we find a lot of times is that some of these pilots are making, a couple $100,000 or more, right? And there's a maximum benefit that can be provided by their union. And a lot of times it's not truly to that 60 or 65% range. It might be, based upon their income, maybe it's only a 50%, a benefit for them. So what we want to do, we're not in competition with what the union is providing them. I think it's great that the union does that for their people. What we want to do is leave that in place, and then we would stack on a little policy to get them to that true 60 or 65% that they may need. Yeah.
Which is, one of the big things around there, especially towards the, you can't fly past, a day past 65, right? And as you're approaching that, you're typically in your higher income years. and you're getting those 401k contributions as well. And that
Right.
that also, to get 60% minus all the additional benefits that, we have, we have had some pilots who have looked at that and said, okay, I now see it's not just the loss of income, it's the loss of a few other things as I get closer. I just had a client who 57, they're not a pilot, but 57, healthy, fit, never smoked, nothing. And he did have some heart issues that were just hereditary, right? And, to him, he was just like, hey, I knew it was coming. My dad, my grandpa, you can kind of see the lineage, the genes that came from. So,
Right.
it happens.
It does happen.
Yeah. Another question that came in: How often does an insurance company check to make sure that you're still eligible for the policy you're covered under?
Yeah, great question. That really depends upon the carrier themselves. I would say it's at least every year, but I would say that they are going to usually check up on you most likely about every 6 months.
Mm-hmm. Okay. And then an additional question for, this person's clearly not with unionized group, but if you're a pilot, like are pilots able to band together and create their own group policy? Is there any way that they can say, hey, there's 5 of us, we all fly together, can we just get a group policy on all 5?
Yeah, maybe you work for like a charter airline or something like that, right? And but there's no true benefit available to you as a pilot through a group plan. That answer is actually yes, Mark. We can do that. So we can individually underwrite anybody, but then we can also go, if we have enough pilots with a common employer, we can actually go what we call guaranteed standard issue. And that's literally just a census of everybody that would qualify or that needs the income protection. So we'd say, hey, ABC company, here is the name, date of birth, income, and where the pilot lives. And we list all of those people out, and we put together a proposal, and an officer of the company says, yep, these are the people that need the coverage. They sign off on it, and everybody just got their fully portable individual policy. So you don't even have to do anything. You don't even have to fill out a full application. An officer of the company signs off on it. And here's the beauty of the guaranteed issue programs too. We also provide a little multi-life discount for everybody too. So they're not paying quite as much, knowing that we've got numerous pilots on the policy with us. They don't pay quite as much as one individual pilot would pay. It might be like maybe like a 5 or 10% discount, but every dollar counts, right?
Strength in numbers.
Yep. Yeah. That's right.
Perfect. And that's I think we had one more. Oh, go ahead.
I just wanted to clarify something in this question about, I know you've mentioned Lloyds of London. Can you explain exactly how your company or another company who does this kind of specialized policy, how they work with Lloyds? Because that might not be clear to our attendees. They might want to research and find another company that does the same
absolutely
kind of
thing. That's a great question there. So Lloyd's, what we need to keep in mind is traditional carriers are like, they're literally their own insurance company, right? Lloyd's is actually a marketplace. And so the way I tell people when I'm doing training sessions is to think of Lloyd's more like the New York Stock Exchange. You don't get to just go right down on Wall Street and just go buy stock directly from the stock exchange. You have to find a broker that is licensed with the New York Stock Exchange to go purchase that stock. Same thing with Lloyd's. You can't go directly to Lloyd's to go find that. You have to find what we call a cover holder. Well, that's where my company, Peterson International Underwriters, ties in. We are technically a managing general underwriter on behalf of Lloyds of London. So to Mark and other insurance professionals out there, we look like a carrier and we do all of the things that a traditional carrier does, but we're not retaining any of the risk. All of the risk is put on Lloyd's paper, and they retain 100% of the risk, and they're paying 100% of the claims. The cover holder, which is us, is your avenue to get to the Lloyd's market because you can't go directly to them. That's, in the most simple terms, that's probably the best way I can explain that.
And
Okay.
Mark, I think we have one more question and then we will go ahead and close out here.
Yes, I think this one was inspired by the other, or by the story I told about the 57-year-old. So someone was asking, if I have my medical certificate, but my family does have a history of a medical condition, will that be viewed in the underwriting process?
No, no. When we're looking at disability policies, we're looking at your health. We don't really look at family history. We want to know what's happened to you. Now, one of the questions was, are your immediate relatives alive or passed away, and why did they pass away? We don't really, we ask that, but I don't really think they take that into account when they're doing the underwriting process. So it is on the application, but it's not, we don't take that into account when we're really underwriting a policy. We want to know specifically your history, and that's all we can really look at.
Yeah, which the benefit to the pilots is, where there are some people where it's, hey, we didn't really pull much of a medical history on you. You haven't been to the doctors in 8 years, and it looks like you had a prescription 10 years ago that you never took.
Right.
Pilots having that very constant, I mean, they've got mountains of medical paperwork, or not paperwork,
Absolutely.
but just, clearance, right? It's just
Right.
patting the file and making sure they're healthy, and, which is good. I like having healthy pilots
Right.
on the planes I'm on. So
Exactly.
whenever my wife tells me to fly safe, I'm like, don't tell me that. Tell the pilot that.
Right. Exactly. Yeah. Right.
I'm not flying.
All right. I'm not going to land her today, so we're good. Yep.
Which everyone should be thankful for.
Absolutely. Absolutely.
Well, we hope that this webinar has been very informative, very educational for our attendees. And we want to remind attendees that you will want to check your email for a link to a replay of this event. You're welcome to share that with friends, family, or also fellow pilots. Obviously, this is a webinar for pilots. And on behalf of Advice Chaser, I want to thank our speakers and the organizations that have worked with us to bring you this webinar today. A little more about Advice Chaser. We're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we'll see you at another webinar soon. Goodbye, everyone.
Thank you.
Thank you.